Welcome to the Global Pulse, a short video series where our experts break down a trending topic in international business and why it matters to you.
Today we have a story to tell. It's about Kathleen and Charles Moore, U.S. citizens who invested in a foreign corporation company in India. The company has done okay, made some profits, but hasn't paid dividends back to the Moores as of yet. And therefore, the Moores hadn't paid a U.S. tax until in 2017, the United States Congress looked at the Moores, not literally, but figuratively, and said, wow, the Moores are not alone. There's over $2 trillion in foreign profits in foreign corporations as held by U.S. shareholders that the United States income tax code hasn't yet taxed because the dividends haven't been paid back to the U.S. shareholders. Those profits haven't been paid back in the form of dividends. $2 trillion. Well, 2017's Tax Cut and Jobs Act, the United States Congress did a retroactive tax on all those profits, even though the dividends hadn't been paid. And they gave a break in the rate. So that was an incentive for many of the multinational enterprises to pay the tax here in the United States under the auspices that they could now afford to take the dividends without the U.S. tax bite being too heavy. Meanwhile, the Moores pay a $14,729 tax bill because of this law, and they sue for a refund. And they sue for a refund under the theory that it violates the realization principle. They're paying tax on unrealized profits, and they don't believe they should have to do that. This case has gone before the Supreme Court and is on the docket for this next season, which begins the first Monday of October in a couple of weeks. Problem with this whole case is not just the Moores issue, but there are dozens of tax codes in the Internal Revenue Code which really tax unrealized profits. Our whole system of partnership taxation, S corporation taxation, which is a huge part of our economy here internally in the United States, is all based on taxing unrealized profits not distributed to the owners. If the Supreme Court rules a certain way, our income tax code will go haywire, and Congress is going to have a lot of cleanup to do to try to figure out what to do with that mess. On the other hand, if the Supreme Court rules the same certain way for the Moores, giving the Moores the break, saying they shouldn't have to pay tax based on this tax law, that it was unconstitutional, then we've got another issue on the international tax scheme. And that's why we've gotten to the global plus here. And the issue is that the OECD, the Organization for Economic Cooperation and Development, is working very hard over the past 10, 15, 20 years to create a scheme of taxation amongst the multinational enterprises, which is fair on the international tax market, so that countries don't have profits that they should be entitled to tax being moved offshore to tax havens. Multinational enterprises aren't playing games with their tax lawyers to avoid taxation in what should be their home country or the country where the profits are made. And the OECD is doing their damnedest to cut this out. Right now, they're on the cusp of getting to a place where they may have it nailed with pillars 1 and 2. That's what they're called, pillars 1 and 2. Pillar 1 basically is going to tax the profits of multinational enterprises based on where they're made in the economy. So in other words, if you have a tech company selling online to customers in France, just because they don't have headquarters there or offices there or employees there, they really should be paying a tax on those profits made off the French economy. That's what Pillar 1 is going to basically do. And it has some logic to it. Pillar 2 even has perhaps more logic, arguably. It's a global minimum tax, which will just cut out tax havens worldwide. We have over 140 countries in principle agreeing to pillars 1 and 2. And with that many countries, we're not going to have too many tax havens sitting around just waiting for multinational enterprises to play the game of getting all their profits taxed in a really low tax country. So this 15% global minimum, it's a pretty good idea to create fairness amongst the multinational enterprises paying their taxes to the countries that it rightfully belongs. Problem with Pillar 2 and this Supreme Court case that the Moores have brought is that That global minimum tax requires an income inclusion rule, which, as you can probably guess, is the taxation of unrealized profits on an annual basis. So the Supreme Court rules a certain way. The United States will be out of cooperating with Pillar 2 without the United States going along with this. It's just not going to work. So the Supreme Court's holding a big card, not only toppling the Internal Revenue Code, but toppling what the OECD has been hard at work and sweating over to get accomplished, creating some fairness in the international tax scheme.